Hello, traders. This is Blake Morrow, and you are listening to the daily Roundup webinar. Hope everybody's having a great trading session, and volatility is back. Thank God. So we're seeing obviously quite a big move, and the big move is really coming in the euro dollar. So let's talk a little bit about the euro, and I'm going to be the first one to admit I did not expect the euro to be right here, right now. Not with equity markets as strong as they are. I expected the euro to come back off a little bit. I do understand that it's a massive short position. I do understand that we were hitting the 200-day moving average, and I thought at that moment, that's it. It's not going any higher than that. Even though I didn't want to stand in front of the euro, I was like, nah, that's got to be it. And I was waiting for a turn lower, because if you guys don't remember from this morning, if you were listening in from this morning, I was looking for a dip to buy. That ain't coming, and that's scary. It's scary for a few different reasons. If you see the euro doing what it's doing right now, you have to be thinking, okay, at what point does the market actually take notice, or what do people know, what do traders know that we don't know? Because if you're looking at the S&P and you go, well, the S&P is bouncing, which we're if you're in the chat room, we're at the top of the flag formation here. We already talked about it. We're looking at like a bear flag, so this way you guys know what we're looking at, because no one was probably caught short down here, because as I told everybody today, you got to wait for the equity markets to hit new highs on the day, as they did, before you even consider taking some risk off trades. There is, and it looks like there's going to be a coordinated response, at least, as G7 central bankers are going to be on a conference call tomorrow. So now everybody's got these expectations of central banks providing liquidity. They will be, and I say the market will be probably disappointed if they do not deliver, cuts. If it's just, deposit windows and just providing liquidity in that manner, then I think the market may find itself, falling after this recent recovery. But it's a little scary to be shorting equities at this moment, because that's coming over the next 24 hours, or shorting risk. So therefore, you would think that the euro dollar would turn lower. We are at an 88% retracement. This is, and take a look here, also 127% extension of the move lower. So we should theoretically turn lower in the euro here. But the fact of the matter is, it's not. I mean, look, it's the 88% retracement of this move, 127% extension of this move, and the euro's holding in like a champ. So that's scary to me. That reason alone at this moment makes me very nervous about trying to short equities or short risk, knowing where we're at. All right. So because of that, you've got to be a little careful. Now, you look at the dollar yen, as I was, telling people in the chat room, I think we're building a wedge here. Yeah, this is what I'm looking at. I thought it would be more of a triangle, which it could be, but I think it's more of a bearish wedge, consistent lows, lower highs. We just hit the 618 retracement. Maybe if this equity market continues to rally, we might get up towards 108.30, and I think this is going to be the pivotal area for the dollar yen. Is going to be right up here around the 108.35, maybe 25, depending on how this is drawn. Remember, we're now dealing with higher volatility, so your trend lines that you're looking at, the fib levels that you're looking at, you kind of got to give them a little room for error, because things aren't going to be, they're not going to be picture perfect anymore because of the amount of volatility that we are seeing. One of the other things that you got to think about going into this evening is we do have the RBA. Everybody is expecting, I know that going into last week, no one was, or only a couple of economists were expecting the RBA to cut. They're expecting, everybody's expecting them to cut tonight. So chances are, as long as equities stay strong, chances are the Aussie is going to rally towards this 66.50 level. All right. And especially if the RBA does not deliver a cut and surprises everybody, we will spike. But I'm looking at this area, as I've told you guys before, I am looking at this area, the 66.50, 66.60 area, as a level to be on the short side of the Aussie. If we can get there, that's the question: are we even going to get there? The other thing I want you guys to think about is that we are currently recovering based on sentiment. All this talk about central banks, all of this, all this potential policy action, it's shifting sentiment a little bit here. And you can see it obviously in the markets. But I'll point out again, and I know my colleagues have, and I know you've heard it, at least, if you listen in here normally, you've heard it from us. The central bank liquidity, whether it's delivered by interest rate cuts or providing liquidity in however shape they decide to do it, if they decide to do it, it won't cure the coronavirus, right? So if the coronavirus continues to make its way around the globe and it slows down economic activity, continues to, especially here in the United States, then you have to be a little careful with equities as they're rallying. They could find some sort of high at some point. So just keep that in mind. I don't want you guys to get too carried away trying to pick the bottom. I'm looking at really any move above like 3,100 is going to be it's going to be on my radar. I'll be looking at seeing if I can find some more desirable levels to be short risk. I don't necessarily need to trade the S&P. It might be in the tune of shorting the dollar yen or something of that nature. Maybe the Aussie yen. But 38% retracement of the S&P move does come in at 30.60. I guess we should keep that in mind as we move into this this evening into Asia. So Shab asked, "What about oil?" I don't really care about oil right now. It completed its it completed its bear flag pattern. So now once you complete a flag pattern or a pattern in general, right? Did you saw this, right? This is the bear flag. I've been talking a lot about it. It's complete. Once it completes a pattern, then you got to imagine there's going to be some sort of little recovery. And my 2 cents would be that it's probably going to be up towards these levels. There's all these OPEC finance ministers. Russia just said that they're going to cut production. Everybody's trying to support oil. So, can we see a dead cat bounce here? Absolutely. And that's what I think that we're witnessing at this moment. All right, guys and gals. Remember, if you haven't tried out ForexAnalytix, make sure you do so. It's only $1 for 10 days. Come jump in the chat room with us. When you do that, make sure you download the mobile app. And I want to say thank you for listening in today. I appreciate it. So I'll see you tomorrow morning on the FACE webinar. Remember, it's free too. I'll see you there. Thanks, guys.